Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 11th, 2025, we're putting the spotlight on the USDCHF currency pair, analyzing both the latest news and its corresponding chart data. Let's begin by understanding the current landscape shaping this pair, especially with the recent headlines. Recent news from FX Street indicates that the USDCHF is trading below 0.8100, but actively approaching this level, with the Swiss franc notably on the defensive. A key factor contributing to this weakness for the Swiss franc appears to be U.S. tariffs disrupting Swiss gold exports, creating a notable headwind for the CHF. Furthermore, Investing.com reports that a sharp reversal in euro to Swiss franc, which correlates with CHF weakness, has been driven by this tariff hit to the franc and a growing hawkish sentiment from the Federal Reserve. This Federal Reserve sentiment implies a strengthening US dollar, directly impacting USDCHF. Action Forex also noted that USDCHF recently dipped to 0.8020 last week, but quickly recovered, indicating a strong buying interest at that lower level. Looking at our daily chart, the current price is around 0.807, aligning with the news that the pair is pushing towards 0.8100. Now let's dive into the technicals, starting with the long-term perspective on the one-day chart. Over the past year, USDCHF has shown a clear downtrend, moving from highs near 0.9200 down to the recent lows. However, zooming into the more recent price action, particularly from mid-July 2025, we see a significant shift. Let's narrow our focus to this rebound period on the daily chart. As you can see, after hitting a low around 0.79057 in early July, the pair has staged a strong recovery, showing resilience and a potential reversal in the short to medium term. This recent bounce from around 0.7900 acts as a strong support level, a critical point for bulls to defend. The price then surged, notably on July 30th, with a significant green candle pushing towards 0.81325. This aligns with the news of CHF weakness and growing Fed sentiment, providing a fundamental reason for this bullish move. However, the rally faced resistance around 0.8150, leading to a slight pullback. Currently, we are consolidating around the 0.8050 to 0.8080 range, with the 0.8100 mark acting as the immediate psychological resistance level, as mentioned in the news. Switching to the one-hour chart gives us a more granular view of the short-term trends and volatility. Here, we can clearly observe the recent recovery from the news-mentioned dip, showing robust buying pressure. The candles show consistent higher lows and higher highs since the late July bounce, forming a clear short-term uptrend channel. Notice the strong momentum on August 7th and 8th, with consecutive bullish candles pushing the price higher. Current resistance on this time frame aligns with the previous highs in the 0.8085 to 0.8090 area. A breakout above this could quickly test the 0.8100 level. Now, let's zoom in further to the 15-minute chart to identify intraday movements and potential entry/exit points. On this time frame, we see the very recent consolidation around the 0.8075 to 0.8080 range. Volume analysis here is crucial. Declining volume during this tight range could suggest a build-up for a breakout. Intraday traders should look for clear breaks above or below this tight consolidation range. The short-term support lies around 0.8060, while resistance is near 0.8085. These microtrends provide opportunities for quick scalps, but always be aware of the broader one-hour and one-day trends. So, to recap the key price levels and outlook for USDCHF. The critical short-term support is around 0.8020, as evidenced by its quick recovery last week. Stronger support for medium-term outlook lies at the 0.7900 region, the recent multi-month low. The immediate resistance level to watch is the psychological 0.8100 mark, with stronger resistance extending to 0.8150, the high from late July. In the short term, A bullish sentiment prevails, especially if US dollar strength continues due to Fed sentiment and Swiss franc weakness persists from tariffs. A clear breakout above 0.8100, especially with strong volume, makes a move towards 0.8150 and potentially 0.8200 highly likely, perhaps 70% likelihood, reinforced by continued positive U.S. economic data and escalating trade tensions affecting Switzerland. However, we must also consider the longer-term bearish trend. A failure to break 0.8100 and a subsequent fall below 0.8050 could lead to a retest of 0.8020, and if that breaks, the 0.7900 region becomes a target. About a 30% likelihood, especially if U.S. economic data disappoints or global trade tensions ease. Long-term, if the fundamental reasons for CHF weakness subside and the overall downtrend reasserts itself, we could see a return to lower levels. Always keep an eye on upcoming economic releases like U.S. CPI data, Federal Reserve meeting minutes, and any new developments regarding trade policies. These events will be crucial in determining the next significant move for USDCHF. Remember to combine fundamental analysis with what the charts are telling you. Thank you for joining us for this in-depth analysis of USDCHF. If you found this video helpful, please like, share, and subscribe to Explain the Charts for more comprehensive market insights. We wish you successful trading.